Report day for the grain markets. USDA delivered a fresh winter wheat crop estimate and updates to the supply and demand tables for the grains. And through it all, corn found a way to move to the upside while beans were slightly lower and wheat gave back a chunk of yesterday's gains. Cattle slipped to the downside while summer month lean hog futures posted a nice upside recovery.
Live from Report Day via Farm Journal Studios, this is AgriTalk. This afternoon, we'll chat with John Payne from HedgePoint Global. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. Now here's the host of AgriTalk, Chip Flory.
All right, Davis, hey, thank you so much, buddy. Appreciate it. Yeah, report day, a big dud for the corn market. I don't think there's any question about that. But corn closed higher. I think that was just kind of the corn market saying, oh, whoo, we got through that without any damage.
Well, I guess maybe, no damage is good damage, right, Chip?
Absolutely. Absolutely. Especially for this corn market right now. No doubt about it. We've got John Payne today, dude.
Yeah, we do. I love hearing from John Payne.
Yes. Yeah. John Payne from Advanced Trading.
Oh, I said the wrong thing.
Will be our guest analyst here this afternoon. So we're looking forward to the conversation with John Payne. And of course, we got Bubba, Todd Horwitz, coming up here in just a little bit. So looking forward to that. Yeah. Just a real quick over the top look at the reports. Absolutely neutral for the corn market, maybe a little bit negative for the soybean market. And then on the wheat side of things, despite the way that the market reacted, the increase in the crop production estimate was more than offset by increases in use. So all in all, not that much of a negative report for the wheat market today either. So, all right, let's get to some of the details. What do you got?
Well, Chip, in USDA's crop production report, the winter wheat production estimate was up 17 million bushels from last month. That's a 21 million bushel increase in the hard red winter wheat crop, which was partially offset by a 2 million bushel cut to the soft red winter crop and a 3 million bushel drop in the white winter wheat crop estimate. The increase in production was more than offset by a 25 million bushel increase in estimated 24-25 wheat exports that resulted in a lower than expected new crop wheat carryover. Yep. July SOW wheat futures posted an inside trading day with a high range open and a low range close. July hard red futures opened near session highs and closed near session lows and below support at yesterday's low. July hard red winter wheat futures today 17 3/4 lower, 637 1/4. July SOW wheat down 9.5 to 617. July spring wheat closed at 668 1/4. Chip, that's down 10.5 cents, man.
What a give and take market we're looking at right now. Had the short covering in that wheat trade yesterday. That was gone after today. It wasn't a negative report, but we'll get John's take on what's going on in the wheat trade here in the next segment.
Well, Chip, USDA made no changes to the old or new crop balance sheets for corn. Global corn stocks ticked downward from last month, but nothing happened on the domestic supply and demand tables. Ethanol production week ended June 7 averaged 1.023 million barrels per day, down 49,000 barrels from the previous week, but still just ahead of the same week last year. Ethanol stocks in the week were up 170,000 barrels to 23.2 million barrels. July corn opened at yesterday's low and slipped below that support level before recovering to post a high-range close. July corn has traded on both sides of 450 for 5 consecutive sessions. July corn futures were 4 3/4 cents higher at 454 1/4. September corn up 3 cents to 456 3/4. December corn futures closed at 468 3/4, up 3 1/2 cents. Chip.
Again, we will talk with John about this, but I'm a little surprised that USDA didn't go ahead and increase the export estimate on the old crop corn. It feels like the shipping pace would justify that, but maybe that's something that we can anticipate for the next supply and demand report.
Old crop soybean carryover was put at 350 million bushels. That's up 10 million bushels from last month after USDA cut its peg of soybean crush by 10 million bushels. That drop in beginning stocks for the new crop balance sheet filtered down to the carryover for the 24-25 marketing year. July bean futures opened slightly lower today and fell through support at last week's low and then recovered to trade higher before falling back to close at the opening range. July beans, 0.75 cents lower, 11.77 1/4. August beans down a nickel to 11.66 3/4. November beans closed at 11.47 1/4, down 4 1/4 cents. I had to look away from the soybean market today. I just couldn't watch. It was making me nauseous.
No doubt about it.
Couldn't watch.
Yeah, the thing is, it's a bit of a head fake because the cut in total use, I think, was anticipated by the market,
Okay.
but they cut crush. They did not cut the export number.
Yeah.
A cut in exports seems like might be happening maybe in the next report. We'll talk to John about it. Yeah.
You bet. Old crop cotton carryover was lifted 450,000 barrels from last month on a sharp cut to estimated exports. July cotton today was 99 points lower at 71.74. On your livestocks, live cattle futures gave up modest mid-morning gains after a 45-cent drop in boxed beef values for morning trade. June fats today a dime lower, 183.65. August feeders down 7 1/2 cents to 257.57 1/2. June lean hog futures 7 1/2 cents higher, 92.02 1/2. Chip.
All right. Thank you very much, Davis. Let's bring in Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
It must be manure day. It's not hump day because all we got is a bunch of horse crap from the Fed and from the CPI number this morning. You believe it's at 3.3?
Yeah, steady month to month, right?
Oh.
Yeah, nobody's costs are going up.
No, the oil hasn't gone up 10% in the last month. I mean, listen, we're everything is free now. I mean, inflation is under control. And of course, you saw that he said only one rate cut, and there ain't going to be one rate cut. I'll put on higher odds on a rate hike instead of a cut.
Yeah. Yep, I'm with you. I've been there for a while, and I've been with you on this for a while. That the odds are that, and here's the thing, Bubba. Even if inflation is under control, you don't cut rates as a reward. You cut rates as a stimulus. And until the economy is really struggling, there's no reason for a rate cut, right?
There's no rate cut coming. Listen, I would say, Chip, 75% of America is in a recession. Okay. I would say that they can't get this under control. They spend way too much money. Out of the jobs we have gotten since 2021, 66% of those jobs have gone to illegals. 33% have gone to Americans. Okay? So again, people are working two jobs. They're not making enough money. They can't keep up with the pace of inflation. Everything is just a total mess from what they've created here. And the jobs they have created for America, they're government jobs, which only cost you and me more money.
Yep. The government job growth has been leading the way. No doubt about it. All right, Bubba. Thanks, man. We'll talk to you later.
Thanks, baby.
You bet. Todd Horwitz, BubbaTrading.com. All right, we're going to get into the details and some of the perspective on today's USDA supply and demand report. John Payne, Advanced Trading, next.
Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk.
Welcome back to AgriTalk. I'm your host, Chip Flory. Glad that you're with us on this Wednesday afternoon. Davis, Bubba jumped right in there on the Fed. Fed Chairman Powell is still answering questions from the press, and I don't know if anybody's real impressed with some of the answers that they're getting right now. That's for sure.
Well, I mean, it's the same thing every time. Well, maybe, but maybe not.
Data dependent.
I could do these press conference. Maybe, maybe not. I'll see you next month.
Yeah, no doubt.
I could do that.
But you and I and Vince Malenga from LaSalle Economics have complained about all the conversation that comes from the Fed, and a little concerned that when you talk so much, you lose the potential for surprise.
Right.
When you actually decide to change course or to take some action. I'm not too sure if it hasn't worked for them. I might have to change my thoughts on this.
Okay.
Because jawboning is getting
Sure.
the reaction that the Fed is looking for. I can't believe it, but it seems to be true.
Yep, them just talking about it and doing nothing is creating a degree of market turbulence, of volatility, of volatility, perhaps even, dare I say.
Yes,
so
absolutely.
What are you going to do,
So while Powell has been talking, the NASDAQ is now up 2.15%. The NASDAQ.
Yeah.
I mean, it's just on a tear. The other indices are trying to trade higher as well. But when you've got the NASDAQ up as much as it is, it's pretty hard to ignore that at this point. So Dow is up 97 points. That's 0.25%. S&P 500 up 69 points right now. All right. Let's bring in John Payne, Advanced Trading. How you doing, John?
I'm great. I'm fantastic. How you guys doing?
Doing real fine, man. It's good to have you back on here.
Yeah, busy news day.
It is.
A lot to talk about as we go into kind of the difficult time of the year. Crop progress reports should show some deterioration in the coming weeks, just normally they do. And we've got the story that you mentioned in regards to the Fed. I will say, if you look at there's a website called FedWatch. It's published by the CME Group, and I don't know how accurate it is. Certainly, anybody can guess and put together an algorithm. But at this point, they're calling for 2 now. The odds have jumped from last week, where it was like even money for a rate cut by December, 2 rate cuts by December, to now call it like 50-30 for just one. There's actually kind of a higher percentage that there's 3. So I'm not sure we see it. I think one thing, if you like to watch this stuff, watch the 10-year Treasury note, and then watch that versus core CPI, because that's real interest rates. So when you look at real numbers, which are kind of strips away the inflation and just looks at the inflation data, they're not that far away if they bring it down, because they want to stay, I think, 2 above that, and I think that should keep, or at least effort to keep things sideways. And I heard Bubba talking. I think products are certainly things that are getting more expensive. Anything you can drop on your foot, I think that requires a process to be made. Like labor in that is what's driving everything, and that's why housing, you can't seem to get enough shelter there. Shelter is the one that's really pushing it. So I don't know if the lower rates are going to do it. I mean, that could slow it down enough, and it's a weird dynamic where like they want to slow the economy down so much, and I'm not going to argue whether or not it's working or not. I think they know what they're doing to the standpoint of like they can break it if they want. And right now, the question is like, are they going to break it so much that if the world needs needs commodities again, that production is going to be that much lower in the future. And that can happen both here and in Asia. Asia is the one I think that we're kind of lucky on, or they are lucky on, to a degree where we don't have an inflation problem in China. If you had an inflation problem in China right now, there would be massive inflation that the U.S. would have to worry about. And that's, they're probably lucky at this point.
Right. Yeah. Talk to me a little bit more about that connection of the economy, the U.S. economy, to what's happening in China, because they continue to struggle on their recovery. Here in the U.S., it feels like a chunk of the recovery from the pandemic low has already taken place. I don't think we can say that about China, can we?
I think it's all manufactured. I mean, it's not, they're not seeing there's a really good chart somebody posted. I wish I could find it. I think it's probably by the FT, that showed the dollar cost per unit of labor in each of these countries. And China's like triple what it is in Vietnam. It's way more than it is in Mexico, and it's actually, China is not the cheapest place you're going to get a trinket made anymore. And so they're doing all these efforts to stimulate their economy, to try to keep things somewhat expensive there. And these are other assets that need to stay expensive, that they're having a trouble. You can't have both. You can't have your cake and eat it too. If you want cheap labor, you need to have a lot of unemployed people that are willing to work for cheaper. That's how labor markets move. And at this point, if you're just going to stimulate the economy and give people money, they're not going to work. We saw that in this country during COVID, where you saw the participation rate really fall. And then by the time you need people and you need supply, and I think, again, this is a kind of a thing for grains, is if once you need that supply and you get that snap and it happens, then all of a sudden it's like, oh, well, we need you guys to produce again. And it's like, well, they might not be there anymore. They might be out of business. Grain guys might have put a bunch of solar panels up. I mean, those are the kind of things that I kind of think long term I worry about, just due to the fact that I know where we are relative to the cost of production. And I think we're right there, especially in South America. That's the one I would really, I'm not saying root for, but if you're going to see this market collapse, if there's one green shoot that could come from it, it would be that the South Americans stop expanding. If that happens, that I think is a green light. Against markets, because there's so much of the world that depends on this Brazilian supply. You don't have Ukraine so much anymore.
John, as you were talking about this and the impact on total production, I'm thinking to myself, there's nobody in Iowa that all of a sudden is going to stop producing, because if you've got access to that ground, you're going to grow a crop on it.
Sure.
But when you look at South America, they need the financial incentive not only to expand, but to continue doing what they were doing this year. They've got to have the financial incentive to do that. They will leave stuff out of production. If it's going to cost them money to grow a crop, they're not going to grow it, right?
Yeah, I don't. It's not so much about even growing like what they've already established. It's about this future expansion. And I don't want to misquote the number, but I think it's something like they've created like 3 or 4 states of Iowa in the last decade worth of supply. And that can't continue. It can't continue. Well, I mean, it can. They kind of have the land if you want to go there. But I think what we're learning a little bit about Brazil now is that, the larger you grow, the more your world's going to be upset by weather. Somebody's going to get a problem. But I think, this is all things for the green shoots in the long run. It's like the U.S. industries that use grain are doing pretty well. Whether, you're feeding, feed numbers are what they are at this point. I think short term, it's not such a pretty picture, but the last few years have been pretty good for the guys putting grain into an animal. Feed residual, the residual side, the industrial side is doing very well. And ethanol, I just love driving around the Midwest and getting this. I don't have an E85 car, but if I did, you look at the price on that, it's very attractive to want to put that to use. So, for the US, I think it's okay. For the global markets, that's where you're concerned. And we can talk about hogs maybe in the next segment, but the biggest risk to all of this, in my opinion, are these foreign government markets, the currency markets. And the peso collapses. What happens then? What happens if the Brazilian real, collapses to a degree? You have really kind of 3 big currencies out there in the US Midwest, and we'll call them corn, beans, and wheat. And beans is more of a South American currency. That's kind of a reflection of how the markets are in Brazil and the attitudes towards their ag sector. I think corn is the United States, and I think wheat's Europe. And I think that at this point, that's the good reflection of how these currencies have traded. You look at the Black Sea markets and the problems there. So it's kind of the way I would look at it, especially if you store grain, in this world where you can get out of this ballpark when it comes to Bitcoin and all types of different alternative assets. But one alternative asset is supply. Supply that it's in your field. It's being stored in your field. It's not sold yet. You own that kind of currency. We'll call it corn. And I think there's good days ahead for it in the United States. I just worry in the macro side of it, from the global perspective. The Fed, they can't control demand in China, and that's where I worry a little bit.
Exactly. Okay. All right. Hey, we are in the middle of a conversation with John Payne, Advanced Trading. When we come back, John, I want to talk a little bit about some of these international issues that we need to finish up that conversation. Then we got to get to the details of some of the reports and some of the changes that didn't happen on the corn balance sheet, some of the changes that did and didn't happen on the bean balance sheet. We got to get to all of that. We'll do it next. John Payne, Advanced Trading, here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 17 3/4 cents lower at 637 1/4. July SRW wheat down 9 1/2 cents to 617. July corn futures were 4 3/4 cents higher on the day at 454 1/4. December corn futures closed at 468 3/4. That's up 3 1/2 cents. July soybean futures 3/4 of 1 cent lower, 1177 1/4. November beans closed at 1147 1/4. That's down 4 1/4 cents. July cotton today 99 points lower, 71.74. On your livestock, June fats a dime lower, 183.65. August feeders off 7 1/2 cents to 257.57 1/2. And June lean hog futures 7 1/2 cents higher, 92.02 1/2. Go to tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Knowledge is power. We're here to charge your batteries. AgriTalk.
Welcome back to AgriTalk. We are in a conversation with John Payne from Advanced Trading. I'm going to jump right back into it. John, in the last segment, you said something about the peso has collapsed. The Mexican peso has collapsed. Said it might be having an impact on what's going on in the hog trade. Talk to me about that. Build that out.
Sorry, I thought I was muted there, Chip. So yeah, I want to be careful. Collapse probably wasn't the term. It went from 17-1 to 19-1 pretty sharply over the last 2 weeks. A lot of that had to do with the elections that happened over the past, I think it was a weekend ago.
Yeah.
So I don't want to sit here and be an expert on Mexican politics by any means, but it sounds to me like the more left party won. And you know, the economic gains that have been seen in Mexico since NAFTA 2.0 that have really been exacerbated, you know, since COVID. And really, I would say if you want to give Trump credit for anything, it's two things. If you're Mexican, it's one, you've seen a huge shift in production move from overseas to Mexico. And two, you know, they've been a huge boon of the trade war that's gone on with China. So those are things that, you know, we've seen a really good economy develop there. And now, you know, you kind of have the snapback of that as people want to get theirs. And I think the more, you know, social policies that maybe get put in play, I think it scares the market. So if you look at a correlation chart of really the last 3 or 4 months of the peso versus hogs and these hogs specifically, it's almost like lockstep. So 2 weeks ago, we saw the top in the market in the peso really exacerbating late last week or this week. And then, you know, we've seen kind of similar action in the hogs where, you know, that's where our demand growth is coming from. And it's there, it's in corn, it's in beans, and it's in pork. You know, Mexico has been kind of this new buyer of our supply, certainly more than on the margins before.
Okay. All right. John, we got to hop over to the supply and demand reports that we got today and the winter wheat production estimates. 17 million bushel increase in the winter wheat crop estimate. I don't think that was a surprise to anybody. It sounds like the early harvest results are coming in really good in most areas, aren't they?
Yeah, I think that's the takeaway I have. You know, I know the harvest has kind of been going on. They caught some rains in Kansas at a pretty good time. Of course, we've had that west part of Texas. Texas this year, which, you know, those supplies all getting to the market. And, you know, the wheat trade is, you know, really such a quick market in a sense of like they'll have a train go up to the Dakotas and then it's gone, you know, so it's kind of like getting on a ride. And it's like, you better be getting in line to get on that ride. Otherwise, that might be just gone and you might not have any market anymore. So probably a little drastic way to put it, but you have, you know, that kind of supply situation that can happen in the U.S. because all the rally we've seen over the last 2 months has really come from Black Sea and European news. You know, I think that's certainly not going to reflect in our basis here.
Right. You know, but USDA increased the export estimate for the 24-25 marketing year, 25 million bushels, put it up to 800 million bushels. 800 million bushels is not a great number for wheat exports, but it's better than what it has been. I guess if I'm going to be looking for any silver lining on it, that would be it.
Yeah, and if you're looking for a green shoot, and again, economics is really about you have a pain point, and then what happens to the reaction to that. And so with this war, you've seen tremendous inflation in Russia. Russia has a lot of supply, but they're having to protect their own supply because they don't want to get. They could sell it for really cheap, but if they do that, it'll make their own consumers have to spend more money. And so, you've seen kind of the war being paid for by the Egyptians to a degree. They're the ones buying all this wheat and, more wheat from the Black Sea. And so this is, kind of a story that's been going on a while. When I started in the business, the U.S. used to export to Egypt. We no longer export anything to Egypt.
Yeah.
Close
the office.
Right. And so now this is, maybe a little bit of a turn. I don't think it's, I'm not talking about that kind of business, but you have an inflated price in Russia because of these export taxes. Well, the U.S. is going to slide in there, especially if you're looking for a good trade, like a good, reliable partner that's going to meet your photosynthetic demands. The U.S. is the store. That's where you're going to go. It's just more like I don't want to deal with the dollar, and I don't want to have to owe anybody in the U.S. any money. I'd rather owe the Russians. And at this point, it's more default risk, I think.
Yeah.
So I would be. I'd be a little nervous to be bearish. I mean, for me, I think you got to treat these markets to a certain degree, not with all your supply, but look at selling some of the deferred contracts. Like that's where you can get some at least early sales made rather than maybe dumping your old crop here in hedges. Look at hedging some of the 26 or the 25 wheat. I mean, that's probably, that horse has probably left the barn to a degree, but we get above $7 and the U.S. cost of production starts to look pretty good. I'm not saying you're going to make millions, but that's where I think you got to be looking to make sales. And I think the case could be happening in corn where, the story I'm saying about Brazil in the last segment, that can disappear pretty quick if about $5.56 corn. So, exactly. those markets might come, but if we get a rally in the next 2 months, it might happen. And those markets might really get up to 556, maybe not 6, I don't know, but 550, I think could be a case. And I just don't have enough confidence in any of this, any calls for what the crop looks like. The USDA, CONAB, it's just everywhere. So you got to kind of look at the spreads. And right now, I think the spreads are telling me that the U.S. is cheap. The U.S. is cheap relative to the stock market. The U.S. is cheap relative to Brazil. And the U.S. is cheap, relative to, certainly to a steak. I mean, those are things you can measure against that are a little more fixed.
Yeah. Yeah. Okay. The balance sheet on corn, no changes. The only thing that concerns me there is that they probably should have taken something, or they should have added something to the corn export estimate is the way that I was feeling on the old crop. Something that we might see in the July update.
Yeah, and if it doesn't come out, like all of that stuff can show up in this next June report, the end of the quarter stocks report.
Yep.
That's where the accounting gets kind of audited to a degree.
Yep.
But it's a different service doing it. You have NAS doing one and is the FAS doing the other. I'm never really sure on the agencies that count this.
Board does the supply and demand. Yeah.
Yeah. Okay. So, and then you have this acres number. So in the end of the month, I think it's the 28th. That's really more important in my opinion, even going into today. And I'm always kind of ready to be wrong in these USDA numbers, but I just think these quarterly numbers are the ones to really watch.
Yeah.
I'd rather just let me know how many grain stocks we have. I'll do my own math on it all, and I can estimate it. Because
it's perfect.
We're counting all this supply, and it's like, well, who do you believe? And if you start getting wrong on 1 year, and then you're wrong, you're getting hundreds of millions of bushels away.
Oh yeah.
Where you think the number of supply would be?
Yep, it snowballs on itself, and it happens in a hurry. I mean, the last big example that we can make of that was back in 2009-10, but it was an issue for 3 years, John. And it was a big issue.
Do you remember when China just all of a sudden increased their supply and overnight report? Like, was it maybe 5 years ago, 6 years ago, where we walked in one day and all of a sudden the Chinese were like, nope, we have like double the supply we said. Because we did some 10-year survey, and it's like, all right, like, okay. So I don't really, tell me what your prices are. I think that's where there's a lot of good data out there as far as what gets paid overseas. And like, that's where I want to know. I want to know what these countries are paying. And in the case of wheat, the price is up. It's certainly up. In the case of corn, it's flat. I wish I could give some rosy picture. The fact is it's better than it was pre-COVID. And I think that's kind of a statement. The Asian buyers, Japan and South Korea, have been buying at the same price, 240 to 245 a metric ton. And that really hasn't moved. And so at this point, I think that builds demand, but I don't know if it's enough to get the market to go, on that alone, like it is in wheat.
Okay. All right. The old crop bean carryover, as we mentioned earlier, up 10 million bushels. It's because of a 10 million bushel cut to the crush estimate. They didn't adjust the export estimate. We might see some adjustments to that in upcoming reports. That increase in beginning stocks made it all the way down to the carryover on the 2024-25 marketing year as well. John, give me your attitude. We've kind of touched on it a little bit, but when you're talking with clients right now and trying to figure out what to do on risk management, what's your overall attitude?
Well, my attitude is the people that are using the board, the overseas sellers specifically, are all borrowing money from Brazilian banks and trade houses in the United States, and they're just simply selling that July contract for next year. So what busts them out? Like, that's what I need to kind of, you really want to pay attention to on soybeans. I think right now the U.S., I think we're painting in a somewhat rosy picture at $12 for a supply and demand number. I think if you get a big crop and I don't know, I mean, you guys, I think beans are much easier to calculate to a degree. From the long run, you can you're just counting two stores, you're counting the exports and you're counting the crush. But I would say it's easy for me to make a bearish argument, and I don't want to leave it too vague, but that scares me. Like when I've sat in a lot of meetings with banks the last couple of weeks, and all I take away is how bearish everybody is. And for me, that's concerning over the long run, because I just know, especially with the Brazil stuff, like those guys are short that new crop bean, and they got a little lucky this year. They don't sell as much corn ahead, just because it's kind of a second crop afterthought. But the soybeans, like I'm no longer with the Brazilian firm I was with before. I'm now with Advance out of Bloomington. And the one thing I'll take away from working for Brazilians is that they borrow money and they sell right away, and that's what they do. They don't have any plan other than that. And if they can get covered, then they can get loans for future crops. So what busts them out? What puts heat on that trade? And it's really South American supply. And that's going to be months down the road.
Awesome. Interesting conversation, John. Hey, man, thank you so much. I appreciate it.
Thank you, Chip. Best as always. Have a great summer.
You bet. You too. That's John Payne with Advanced Trading. Okay. We're going to go back over some of the details of the report and add a little perspective. Davis and I will be right back here on AgriTalk.
The chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk. Welcome back to it, everybody. This is AgriTalk. I'm your pal, Davis Michelson, here with Chip Flory this afternoon. Making our way up hump day is what we're doing here.
Yeah, we are.
Time. One foot in front of the other. That's what we do.
Steady
as you
go.
John Payne was our guest today. It was interesting because this is I believe the second consecutive Fed meeting in which, while we were discussing sort of the aftermath, the results, whatever, the treasuries came up. You want to know the real story? Yeah. You got to look at treasuries. Came straight from John Payne. There it is
go
again.
To the 10-year.
Yeah.
Yeah, go to the 10-year note. That is right there. Exactly what it's a very accurate statement, because it is something that we all need to be aware of as we go forward, that the cash interest rates are going to really set the tone for it. There's no question about that. Okay, Davis, you know what? I'm going to make an audible on us. Okay?
Okay.
All right, because earlier this week, Senator John Boozman, the ranking member of the Senate Ag Committee, released the framework of the GOP Farm Bills plans. Joining us now is Senator Roger Marshall from Kansas. Senator Marshall is a member of the Senate Ag Committee as well. Senator, welcome back to AgriTalk. It's great to talk with you again.
Yeah, Chip, it's great to be with you, and you forgot to say the all-powerful Ag Committee.
Yeah.
So we got to get that part.
Yeah, it's a good ad. That's a good addition to it right there, Senator. So tell me, what are you liking? What are you liking about the GOP framework of the bill?
Yeah, well, Chip, it's great to be with you, and I'm so proud of the work that Senator Bozeman has done and the folks on the Senate Ag Committee, the Republicans. We put farm back in the Farm Bill.
Yep.
That what we hear producers across our own states talk about is the backbone of every farm bill is crop insurance, and crop insurance.
Yeah.
And we finally, got some things down in writing to say this is what we got to do. That is to tell your listeners that the cost of crop insurance has went up significantly. We could talk later about that, but we've also increased the reference prices.
Yep.
That's something we've been barking about now for about 5 years, but I think we'll increase the reference prices for most commodities around 15%, and that's going to help stabilize the Title I program for ARC and PLC. So we put the farm back in Farm Bill. That unfortunately was not a priority for Senator Stabenow, but it's a huge priority for Republicans, and we're glad to get this offer on the table now.
Okay, I don't want to get too deep into the weeds on this, but there are some important differences between the GOP proposal and what is coming from Stabenow. And I mean, it is simple as the multiplier. When you're figuring out what that reference price is going to be, the Senate bill, the process right now is to multiply that Olympic average times 85%, and then take the higher of that or the current effective reference price. But your proposal would move that from 85% to 88%. It doesn't sound like much, but do the math, and it adds up very quickly, doesn't it, Senator?
Yeah, exactly. And at the end of the day, I think it's going to be it basically ends up raising that reference price at the end of it about 15%. So I think it's a huge difference. And again, I think as we just think about record losses for decrease in farm income for my farmers, and then just the input cost going up, but commodity prices not reflecting that right now. If Americans want a stable supply of food, and at the grocery store, even though we've got inflation, we still have the lowest priced groceries in the world. So we're so proud of that. And what these safety net products do is stabilize the market. So that farmer in Kansas, my goodness, we've got 4 counties that are under a drought emergency. We've got another dozen that are having a flood at the same time. So it allows that farmer to plant next year's crop. Everyone would much rather harvest a good crop, but about a third of our wheat crop in Kansas will be suffering from drought. So this stabilizes next year's supply, and it still has to remain the backbone of every farm bill. And if I could, Chip, there's a couple other really good points in this as well. And I want to talk about the conservation programs.
Okay.
I believe our farmers and ranchers, and I'm a 5th-generation farm kid myself, that we were the original conservationists. But with Senator Stabenow's plans, he put such tight guardrails around access to these programs that Kansas farmers would lose out on at least half of them. When a great example, again, your listeners get this. If we don't do cover crops, we wouldn't have access to some of the conservation programs. Well, cover crops don't work in the western third of Kansas, the western third of Oklahoma and Texas. I wish they did, but they just don't. And then they want to lock us out if we don't have comply with some of their air standards. Those air standards are so tight that that eventually we would not have dairy left in Kansas or a feedlot left in Kansas.
Yeah, absolutely. And so the farmer friendly label that was applied to the bill that the House passed, you can put it on this Bozeman bill or the Bozeman framework as well, can't we?
Absolutely. There's going to be minimal differences between what the House did and what we did. The differences is between ours and Stabenow's. And I think another great difference is just the importance of trade. I didn't even realize this till recently, but last year was the first year in my lifetime that we imported more food in this country than we exported. we're the breadbasket of the world, but we imported more food than we exported. Obviously, Joe Biden has not done a trade agreement, but there are a couple programs within the Farm Bill that help promote marketing as well as in research. I would talk about research as well. We were falling behind in dollars invested in research. So our Farm Bill puts the farm back in Farm Bill. It promotes farm trade and agriculture research.
Senator Marshall, thank you so much for making time for this afternoon and calling in. We appreciate your perspectives on this. We're looking forward to conversations in the future.
Yep, so proud to represent agriculture. Thanks so much.
Good stuff. Good stuff. Thank you. That is Senator Roger Marshall from Kansas. Excellent. Thank you so
Gotta
much
love Senator Marshall. Yep.
For the conversation there. Yep. They're putting a lot of work into the Farm Bill in the Senate on the GOP side, and we need to make sure that everybody understands exactly what is going on there. Hey, thank you so much for listening today. Come back tomorrow morning. It's going to be Merck Day at the Rock Vet Clinic in Laverne, Minnesota. Big Apple Joe Stackler and I will be there at the Rock Vet Clinic in Laverne, Minnesota tomorrow on AgriTalk.